Welcome to ShortView Trading. This is your morning market hit for Tuesday, April the 21st. What matters today for traders? Well, the S&P 500 was soggy yesterday, selling off just short of 2%, and the Nasdaq down 1% and change. That raises the key question, are markets starting to roll? Now, whilst that's a modest pullback in the context of recent volatility in the S&P 500, there are other question marks being raised about the direction of those equity markets. For instance, the Dow Jones Transports have continue to underperform meaningfully in this rally. They, of course, are a great barometer of the expectations for the economic outlook, and therefore their underperformance is not a good sign. Added to which, volumes remain light in the equity market yesterday, and US 10-year bond yields remain near their lows of March, another indicator that's not confirming the recovery expectation. Over and above that, the financial stress in the system hasn't eased much more in recent days. Yes, there are places you can find a little bit more easing, but in aggregate, it's been flat or even modest tightening in recent trading sessions. For example, if you look at US and Eurozone high-yield corporate bond spreads, they've widened slightly in recent trading sessions. The key there is that they're not continuing to tighten and narrow. Narrowing is a sign of risk appetite. Flat or widening is risk aversion. Over and above that, there are lots of other examples. If you look at muni spreads in the US, they aren't tightening in the last week or so. If you look at leveraged loan prices, they've sort of flatlined over that sort of time frame as well. And finally, if you look at some of the Eurozone bond spreads, they continue to widen, and they continue that yesterday. French, Portuguese, Spanish, and Italian spreads are in a deteriorating trend, i.e. continuing to widen. That's a sign of stress in the system that's building. That is a sign of risk aversion, and that is a concern for those who buy into this relief rally in US equities. Added to that, there's clearly been considerable stress playing out in the oil patch. You will have seen the headlines over the past 24 hours with WTI front month contract trading negative, reflecting the lack of physical storage that's still available in Cushing, Oklahoma. Now, whilst that's quite specific to one part of the global oil market, it's indicative of the issues that are out there in terms of economics and certain industries. Added to which, our short-term models retain their sell bias, albeit they've been rolling from sell levels. The technical short-term scoring system remains on sell. The risk appetite short-term models have rolled over from sell, but are by no means on buy. They continue to roll, whilst the level of put protection in markets remains very low, considering the risks that are out there. Indeed, our 3-day put-to-call ratio is not far from its sell signal level, and in times of heightened volatility, you wouldn't expect it necessarily to get back to sell. In other words, there's a big contrast to where it is now and where it was at the lows on March 23rd. Portfolios are not protected to the downside. In other words, they're vulnerable to negative news flow. And as we laid out yesterday, a typical relief rally lasts between 17 and 26 trading sessions. This one is now 20 trading sessions old and entering its 21st trading session today. For full details on how we're approaching this market on a 1 to 2 week view, please see today's daily rag available to subscribers and on the website. So what are we watching today? Well, as per recent trading sessions, similar sorts of things: price action in markets, any signs of more policy response from policymakers, and the stress in the financial system. Is it building or easing? In terms of key macro, it's fairly light. The German and the Eurozone ZEW expectations survey is out later today, as is some US housing data. Key events are pretty light, and we've also got a continuation of US first quarter earnings over the course of today. So that's it from us. That's your morning market here for Tuesday, April the 21st. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Facebook, and or Twitter. Simply search for ShortView Trading. Thank you for listening. Stay safe and trade well.